Welcome, everyone, to another edition of our weekly crypto chat by Huobi Research, where we aim to spark conversations on the latest topics in crypto every week and give our takes on what's happening right now. So, I'm your host Jet, and with me right now is my colleague Henson. So, just to give a quick introduction, we're part of Huobi Global, and we're the think tank arm, named Huobi Research. So be sure to follow us at Huobi_research on Twitter or huobiresearch.medium.com, where we have a number of different research reports that cover the latest crypto topics on a weekly basis. As usual, be sure to leave your questions in the channel and we'll get through to them at the very end. And just to note, everything said here is not investment advice and does not represent the opinion of Huobi or Huobi Research and is that of our own personal opinion. So with that said, it's been a pretty, I would say, hectic last few days. So let's get right into it. So yeah, just to give a quick background or recap on the latest happenings with the markets, we saw basically Bitcoin and Ethereum basically doing a whole round trip from the weekend pump, where previously it went up to as high as 31.8K and ETH around 1.9. And right now we're seeing around Bitcoin trading at 29.5K, ETH at 1.7. 75. So the Nasdaq on the day, as well as the S&P, was up minorly yesterday. Right now, I would say, given the current volatility and everyone's anticipating this week's Friday's CPI print, right now it seems to be a pretty volatile period. So with that said, let's dive into the topics for today. So we'll be starting, I guess on a weekly basis, talk about Goblintown, and also talk about a project that basically pumped significantly over the last week, Waves. Also, a new announcement from the Gala Games, Grit, and also to follow up our discussion last week on optimism and the airdrop, just some governance updates. And as well as just the recent announcement on the rest of a previous OpenSea employee. So with that said, let's dive in, Hanson, on Goblintown.
So okay, we'll kick off with some updates about Goblintown. And so Goblintown recently have launched its McGoblin Burger collection. And before we talk about what the burgers are, we will do some statistical analysis for Goblintown first. So Goblintown is now trading at around 5.2 ETH with a transaction volume of 30K ETH in total. So it currently has a total number of transactions of 30.4K, which has exceeded the NFT projects like Bored Apes, Doodles, and Moonbirds. So the blue chip holders, the blue chip holder percentage of goblins is right now at around 33%. This means that 30% of goblin holders owns another blue chip NFTs. So looking at the table on the right, most of the holders are holding other blue chip projects like the Other Deep Land from Bored Apes and Mutant Apes and Moonbirds. So to compare, Bored Ape Yacht Club has 93% of blue chip holders. Doodles has 50% of blue chip holders, and Azuki has 45. So I think Goblintown having a 33% blue chip holder percentage is an indicator that there are still room for growth. So if 50% of Goblintown holders are blue chip holders, I believe that the floor price for Goblintown might exceed 10 ETH.
Yeah, definitely. Yeah, I mean, I would say, I guess, given the current environment, the Goblintown meme has definitely caught on to the broader crypto community and crypto Twitter. And as a result, I guess, they've kind of, been adopted by the crypto NFT whales, so to speak. And that's why I guess we're seeing a lot of traction, right? Because I mean, I think we mentioned last week where, Sandbox made their, big purchase of goblins And with this latest, I guess adoption further, like what's happening right now? What's the latest other than just getting adoption from the whales?
So Goblintown has launched its new McGoblin Burgers collection. So the burgers is a free claim for Goblin holders. Each holder can claim one burger on their official site, and the burgers are fully customizable. You can choose your five toppings and sides. And by digging into the smart contract codes, we found that the burgers has a burn function that changes the metadata of the um, goblin that is consuming the burger. So that means that that goblins will be able to eat the burgers and transform or evolve according to the toppings you have chosen. Um, there's also Easter egg inside the code. It's a oopsie function that ignores the toppings you've picked. And people speculate that this function will create special edition goblins, like similar to the super mutant potions of Board 8 Yacht Club. And the burgers is currently trading at around 1.5 ETH, which I believe is a good entry to the Goblin ecosystem if you are interested. So the burgers at the moment is very similar to what potions uh, what potions to board apes. So just
Okay.
like mutant apes and board apes, goblins uh, will be able to eat the burgers and transform.
So I just have a quick question, right? So I mean, if they were to technically, I guess you would pair the goblin that you purchase as well as this burger that you made. Will it be a mint and burn function where you basically combine the two and then a new NFT is minted? Or is it similar to, I guess, Bored Ape, where basically you keep the original and then you also get airdrop the mutant? Is
I
is
think
there
it,
any light on that?
No, there's no any confirmations about how will the consuming and burning work, but I think it is unlikely that you will lose your original goblin. So I think they will just follow Brave's path, and then after consuming the burger, you'll keep your original goblin, and you'll also get a new transformed or evolved version of the goblin.
Interesting. Well, I mean, has there been, I guess with the fact that Goblins and this project overall doesn't have any Discord, right? And Telegram, I guess it's just come down to a lot of, I guess, speculation, and just guessing by the community in general, right? Has the team provided any kind of like hints here and there, or is it just pure guessing right now so far?
So yeah, they don't have a Discord, and all their distribution it happens on Twitter. So I think mysteries and storylines are what keeps people engaged. So at the moment there are like three mysteries to speculate on. The first one is the Goblin Burger that we've discussed just now, and the second one is the Goblin Egg. So um, the Goblin Egg is is the top five. The Goblin Egg is a legendary NFT of Goblintown. They are owned by ordinary holders, just like and then they are NFTs that can with metadata that can be changed by the project team. So at the moment, we can see that the Goblin X started with eggshells and it was smashed and now transformed into a moving GIF of what I believe is smaller eggs that are jumping around. So I think like having some unique storylines and narratives are what keeps people engaged and what makes people to follow their Twitter page and discuss about the project. And the third mystery is the 1,000 goblins held by the project team. So when the public mint started, the project team announced that they will be holding 1,000 goblins for their own. So I don't think that they are holding it for the purpose of selling them later, and because it will be an extremely bearish signal that will lead to the crash of the floor price of Goblintown, and because people might think that the team is trying to abandon its project or is trying to block through. So at the moment, people are speculating that like these 1,000 goblins might be like sacrificed in a burning event, or used to create a Goblintown game where the 1,000 goblins will become the core town members of Goblintown.
Okay, interesting. So just to backtrack a bit, I guess for Goblin, the Goblin 8, was that airdropped to all the users or was that selectively
No,
given out?
is given out to the people who mint the the Goblintown NFTs. So they are actually the legendary editions of the NFTs. So everyone has had a chance to get them. So it's like the top 5 rarest NFTs inside
Okay,
the collection.
interesting. Awesome. Well, I mean, I guess yeah, definitely for Goblin Town remains to be seen. What kind of roadmap that they deliver. I mean, I would just kind of caveat and say that, I mean, for crypto in general, I think what we saw in terms of the trend is that for projects that doesn't have as clear or defined a roadmap. I mean, usually if they're able to capture the attention of the community and the general public in the crypto space, I would say actually that's where we see most of the price action and the rise in pricing. Because I would say right, for every other NFT project that's launched recently, I think it's been only down only, right? So Goblin is definitely an exception to the rule because of the fact that they've captured that attention, I think, for the NFT community.
Yeah.
Yeah, so moving on, I mean, so just to talk about a project that I would say probably not a lot of people, unless you're deep into crypto, has heard of, is called Waves. I mean, so Waves is similar, I would say, and made headlines in the last few months, mainly due to the fact that they announced a similar type of mechanism similar to Luna back a few months ago, where basically they had their own algo stable coin USDN, and basically what happens was you saw a significant jump in price action. I think it was in early March where basically the price went up at three to four x in just a span of a week or so. And clearly, it retraced a significant amount of that because of the fact that the whole algo stablecoin narrative was just completely destroyed and decimated after the whole Luna situation. But I mean, the reason why I wanted to bring this project up was that so recently they had an announcement on May 27th about a revival plan. So just to give a quick recap on what was the issue was due to the fact that so previously back in March and April, like I mentioned, when they launched their own algo stablecoin, some notorious, I would say, large whales basically was trying to attack and basically, short, waves and basically try to cause a death spiral. And what had happened was because of the fact that the waves project was, I would say, a lot more centralized compared to Luna. Basically, the founder and the founding team took a number of different actions to kind of navigate and try to maintain the peg throughout that time. So it depegged, I think, twice significantly, and it was able to repay, mainly due to the fact that a lot of money has been kind of locked up in their lending protocol, similar to Anchor, called Virus. And because of that, I think right now there's around 600 million being locked up in that protocol. where because they're trying to prevent a death spiral, a lot of people's funds are locked up and cannot be accessed. And I think the quota and limit right now, from what I remember seeing, was that you can only withdraw $1,000 to $2,000 worth of whatever amount that you deposited in the virus finance protocol on a daily basis, which means that I mean, it's kind of a stopgap measure to make sure that the peg maintains. But the reason why I wanted to highlight was that the fact that as you can see on the right, so this is a chart of the funding rate of waves. So just to give a quick recap on what the funding rate is. So basically, in crypto, I think Huobi also has this product is that there's a perpetual futures trading option where for you to access that leverage, basically you have to pay a certain funding rate. And that funding rate basically finances the leverage position that you have. And what I think we saw in Wave's case specifically was the fact that because of the fact that initially a lot of people were shorting it, as you can see with the graphical, the price chart was going down. And what happened was, I think in the last few days, because crypto, the whole market rallied as a whole, you saw Wave completely squeeze a significant amount of shorts. And that caused the funding rate to go to pretty crazy levels, I would say. Where basically, typically, if you think about Bitcoin or Ethereum, the funding rate shouldn't be more than like 0.01 or 0.02% on a good day. And that is basically the payment that you have to pay, the rate for every 8 hours. For Waves, in the last, I would say just the last week, at the very mania peak of this short squeeze, the funding rate that you would get paid on a every 8 hour basis was around 0.75%. So what that meant was basically for you to just hold a long position, you would have gotten paid 0.75% every 8 hours. So that works out to what over 2% every day just by holding it. So basically what happens is people that are shorting Waves at that point in time had to pay you 2% a day to just hold Waves. So I mean that's why I think the short squeeze lasted a lot longer than expected, and this is mainly due to the fact that the funding, as you saw over the last week, was dramatically over anything that I think we saw in the broader market, which really goes to show that because of the fact that a lot of people piled in and that basically helped cause the short squeeze. You saw a significant amount of people seeing the previous narrative about algo stable coins and the fact that the whole Luna implosion, so to speak, trying to short it, and they were pretty much unsuccessful until more recently in the last day or so because of the broader move down in shorting it, because of the fact that when you're paying such a significant amount of funding rate, if the price doesn't move, you're losing 2% a day, right? If you're trying to short it, and eventually, if you're levered, it really, I would say, hampers your position because of the fact that your stop loss will get continually, lowered, so to speak. So, or increased, so to speak. So as a result, I think that's what we saw in the last few days, and I think right now, especially given the volatility of the market, this is kind of like, a canary in the coal mine in the sense that there's a number of these, more less well-known projects, more illiquid projects where you're seeing a lot of these short squeezes happening. And this is mainly due to the fact that right now there's low liquidity and anyone trying to short might be on the wrong end very easily. And I think in addition to Waves, you saw another, a few other projects that had 100, 200% gains in the last week or so. And this is mainly the reason. So just wanted to highlight this for you guys to be aware of, and to be aware when you guys are shorting. Always understand what the funding rate is and how it affects your trading position.
So at this moment for the average investors, so do you think it is a good time to go long only and look for other short squeeze opportunities since the market dropped so much recently?
Yeah, so I mean, I think I mentioned earlier at the very beginning that we saw basically a full retracement of the weekend pump basically taking Bitcoin back on a round trip basis up 5 to 7%, down 5 to 7%. Um, and I would say because in general, right now the volatility um, and the moves are pretty dramatic. And this is mainly due to the fact that there's not a significant amount of liquidity in terms of trading. And what you're seeing is also a lot of these market makers taking advantage of that kind of situation and causing these pump ups and then pump downs. So I would say right now, for the average crypto investor, probably just to DCA and be careful, just due to the fact that in these times when volatility is very correlated to traditional markets. If traditional markets go one way or the other, you're going to see a lot of that reflected in the price action of the broader crypto markets in general. So definitely be aware of that.
Okay.
Okay, so moving on. I think this announcement just came in the last day, right? So I think Gala Game announced Grit. So what's Grit? Has it?
So Grid is a blockchain and NFT game that is going to be launched on the Epic Game Store. So it is a Wild West cowboy style battle royale, and there will be in-game avatars and horses that will be sold as NFTs. So this is the first AAA blockchain game that will be published on a major game store ever, and I think this will be a monumental moment for blockchain games because other major game stores like Steam or Origin have fully banned blockchain games since blockchain token transactions and NFTs can completely bypass the game store's payment system, and game stores survive by earning a cut from the transactions within the system. So I look forward to know how will Gala Games and Epic Games share the revenue from Grid, because we know that Epic Games take 12% cut of any transactions inside the Epic Game Store, but NFTs and cryptocurrency tokens will take place on the blockchain instead of the Epic Game Store. So the agreement on revenue splitting will definitely be an interesting case study for the GameFi space. So, for example, like how will the NFTs be traded? Like, will it be available on OpenSea, or will it be on Epic Games Store only? So, will Epic Games make a dedicated NFT trading platform just for its blockchain games, or will Epic Games take a cut from blockchain transactions that happen outside the Epic Games Store, and how does it monitor the transactions? And so I think if Grid turns out to be a successful and profitable blockchain game, this will lead to other game stores like Steam and Origin or Ubisoft to reconsider the option of launching and supporting blockchain games. And the pathway that Grid has laid out for them will definitely be a reference for them to look forward to.
Yeah, I mean, so for me, I guess my personal opinion. So let's take a step back, right? So I think before, I would say these last few months, I think the metaverse and gaming narrative really took on in the crypto space, and I think there's a number of things that I want to unpack, right, with this announcement. So I think for now, so far, what we've seen is that a lot of traditional gaming, I would say, studios like Blizzard or others, Riot Games, etc., basically are not as crypto focused or even Ubisoft. I mean, they've dabbled here and there to test things out, but for some reason, I've noticed that a lot of traditional gamers are not very enthusiastic or really hate the idea of NFTs, right? Because I think right now, in the common persona of NFTs are JPEGs, and basically you just trade them and you trade pictures of dogs and memes, and et cetera, et cetera. And that's all fun and good, but then for gamers, usually they kind of discredit it, right? So I think it's interesting because I saw something on Twitter where they were talking about the fact that like usually if traditional gamers hate a certain trend for gaming, usually it becomes very popular down the road. So I would definitely say definitely not to fade NFTs in gaming, and this is mainly due to the fact that I think right now there's kind of two camps, right? So for traditional gaming, right? If you think about it, how do they make the money, right? They want to keep you in their, iron gated, ring fence gaming economy. And basically, you as the gamer will continually make repeated transactions within the game where you're not able to technically, sell or, transact any of the gaming rewards or, skins and avatars that you accrue over the game. I mean, you've seen some form of it here and there on a restricted basis on Steam, etc. But I would say there's a lot of debate around this because of the fact that for as long as the gaming industry kind of existed, the main way of how they've made money and monetize the gamers is through mainly through a gated community. But the difference is for NFTs, right? What you've seen is the fact that because NFTs allow you to have a unique identifier of a certain asset and a representation of this data, what you're able to get is the fact that this value would no longer be ring fenced because of the fact that it can flow through, even if you as a game um, do not have an exchange or a marketplace to support selling of NFTs. NFTs can technically be traded anywhere, right? It can be technically traded on OpenSea, right? It can be traded on some other exchange where as long as it is connected on the same layer one network, eventually maybe not even the same layer one, you're able to transact on it. And for gaming, I would say for gaming studios, it's kind of still a wait and see mode because of the fact that they don't know. I would say a lot of people have kind of made feedback they don't know how that might work in terms of the value slippage, right? Because of the fact that they no longer control the assets and have full rights to dictate, buy and sell, whether or not you can buy and sell. This, value, I would say, accrual has now, kind of transferred over to the consumer side. And for them, I think definitely because of the fact that the gaming model has succeeded so well for so long, definitely remains to be seen, right? So I mean, Henson, I mean, for your point, right? You talked about how I think Epic Games right now charges what 12% on their gaming store. I think what's even more astounding is the fact that Steam and like the Apple Store, because Apple, if you think about it, the Apple App Store hosts a number of different mobile games. It's basically probably one of the largest, I would say, gaming platforms, so to speak. And I think the Apple take rate is like 30%, right? So the question is, my question to you is, right? Why would they give that up, right? Why would Steam or why would Apple give up that nice, juicy 30% revenue from just you transacting or you even basically hosting the game on their platform into this NFT world where basically you have no significant control of your gaming assets down the road. So I mean, that's kind of the debate right now, right? I mean, so do you have any opinion on that, Hanson?
So I think the blockchain tokens and NFTs has definitely changed the revenue model for these game store platforms. So I don't think I think they'll try their best to protect their revenue and not give out their cut to the consumers and the traders. So I think if they are willing to give up that only if somehow they find other new revenue models or new sources of revenue. So for example, if you're trading NFTs on a game that is on the Apple platform, Apple will get a percentage of the cut, just like the creator fees we have now for NFTs, and or um, or for example, if you are using or Apple, like for example, Apple might develop their own NFT trading platform that they can also earn revenue from the games and their apps they own. Or they also another revenue source can be from the token transactions that is used for inside the App Store. So in the future, they might have plans to integrate other blockchains for their Apple Store payments.
Yeah, no, I mean, I think, yeah, another interesting stat, I think just to counter what I just said, was the fact that I think it was ARK Invest, um, uh, investment funds, did a research on gaming, and apparently, if you as a gaming consumer, understands the fact that you can actually transact, the gaming asset that you hold, you're 5 times as likely to spend, more money playing the game, than if you're not able to, basically see any value after you spend the money. Because if you think about it, right, eventually, I think the new meta would be, a combination of what we just talked about, where, for these, gaming studios, or even the gamers, right? Um, Having the ability to, maintain and accrue some sort of value to the work and time as that you spent at a game, I think will dramatically change how people potentially approach games, right? I think we're already starting to see this with a lot of these crypto native games where we're starting to see more of a labor element to it with Axie and some of these more play to earn type of games. And I think this is what's going to happen in the sense where, because of the fact that, you're now able to see value accrual, the actual amount of spending might actually increase, right? I mean, and if they're 5 times as likely to spend, then the pie of the gaming revenues technically should be 5 times bigger because of the fact that through the number of transactions and secondary transactions of people just transacting, I think that would be an even bigger, market, so to speak, right? Because if you think about it, right now in the Steam store, or the Epic store or whatever, you transact, there's a buyer and a seller, and the likely velocity of that trading is not very high because of the fact that the liquidity is probably not there, the number of people that want to transact with you is not there. But with crypto, because of the fact that it connects you in a broader sense, more globally, and as well as in a more decentralized manner where it's permissionless, you're able to definitely have always potentially a buyer. Even if there's no buyer, there's an AMM potentially that can take the other side of that trade, right? And I think that's where the unique value proposition of crypto, and NFTs come in for the gaming side. So, I mean, for me, yeah, I mean, definitely, I'm very excited to see, the clash of these, the convergence of the traditional gaming space as well as the crypto native gaming space. Because I think right now both are pretty siloed. We've seen the crypto side, tried a lot of different things, and mostly, what we've seen so far is runaway hyperinflation, right? I mean, I think we've seen that, mainly through Axie, where, the main in-game token has completely, decimated in value, because of the fact that a lot of these, gaming economies are not, really programmed to understand how to maintain the value within the gaming economy. Because of the fact that if you think about it, right, the the reason why traditional gaming economies are closed and ring fenced is because of the fact that there's value leakage, right? And in Axie or any of these more popular play and earn games, what you've seen so far is a lot of value leakage in the sense that if people can monetize and sell an Axie for a few $100, that is real money, right? That's real US dollars that you can be put to use in many different, potential use cases. And I think what we're gonna probably see is if the game is not fun or not capturing a certain audience, which will continue to be repeated customers. which initially was the case for Axie, but eventually once the amount of people that wanted to play Axie got a significant amount of Axies and bred them and et cetera, there wasn't much more demand because of the fact that the game in general, to be honest, was not that fun, right? And I think for the gaming economies of these upcoming, I would say AAA games to really sustain, right? You would need a gaming economy and a game in general that is well to for lack of a better term, fun, right? More fun in the sense where people would spend money and not just think about the value accrual part, which is what we've seen so far with crypto. So definitely I would say a very exciting trend to keep an eye on, and let's see.
Yeah. So moving on to the next topic, we have well, the debate over the OP governance token airdrop.
Yeah, so yeah, I would say this was a pretty interesting debate over the last week where I think after the OP token airdrop, like we mentioned last week, which was airdropped a few hours later after our broadcast, what had happened was initially there was an outage, and initially people couldn't claim, et cetera, and people couldn't click on the front end, and a lot of people were actually directly figuring out how to program and tap the contract directly and interact with the smart contract directly to get the airdrop. So it was just all over the place, right? And what had come out of it was the fact that I guess potentially members of the community and potentially members of the team what a lot of people were not happy about was the fact that a lot of the people who got in their job, I mean, myself included, like sold it pretty immediately. And I think it was pretty funny to about the fact that what we've seen so far is, a significant, I think it's, the quoted number was over 70% people that claimed sold immediately and basically sold the token and dumped it, right? And what had transpired from that was the fact that from that, a community member of Optimism, basically what they did was they proposed in the governance forum to restrict and ban people that initially sold the airdrop. They would not be eligible for any future airdrops. And this sparked a significant amount of discussion and debate, right? Because, I mean, if you think about it, you're penalizing people that technically sold the token that you gave them for free. And as a result, there was a significant amount of discussions going on. And just to highlight on the right? So a very well-known and famous crypto Twitter influencer named Huobi was basically kind of highlighting the point and kind of making some snarky remarks about this situation. Because if you think about it, right, airdrops is kind of a form of marketing, right, for the project. And once you've kind of given this free, money, so to speak, to the holder or the airdrop holder, they can technically do whatever they want with it, right? I mean, that's the point of crypto, that being permissionless and can doing whatever you want with your assets, right, without restrictions. That was the point. And he made some points about the fact that if you wanted to restrict and basically claim that people that dumped your token are not core community members, I think there's a lot of debate about it, right? Because technically, I can sell the token that I got as an airdrop and still be a very active community member and participant, talking in forums and making suggestions, et cetera, just because of the fact that I think potentially the token might be overvalued, right? So if I think it's overvalued and I sell in hopes to buy down the road later, should I get penalized for selling my airdrop right away? No, right? I mean, I would say, I would probably say a lot of people would, agree that just because you sell thinking that the valuation is high doesn't preclude you from actively contributing to the community and, and raising suggestions, et cetera, et cetera. So I think because of this, it sparked a lot of controversy and back and forth about, are there better ways to potentially incentivize, right? And I think that is probably the core, and that one of these discussions that really came out because we're in a bear market. People don't want to see price down. People don't want to see dumping, et cetera, et cetera. I think it also prompts some healthy discussion in the sense where our projects right now utilizing and understanding how to best, you know, allocate and utilize the tokens for the cause that they want, right? Because if you're going to airdrop a token to a number of different people, you can't control everyone's behavior, right? I think the goal of trying to control everyone's behavior and restrict those people is probably not the best way to approach this problem. It's more to figure out how to incentivize, right? So maybe to continue to be eligible or for future airdrops instead of restricting them, they might have to make contributions, right? I mean, end of the day, the best way to reward continuous and active participants is to value them more, right? Compared to a user like me, which is use optimism here and there only, and have not participated actively in the community. I should not get a significant share. I mean, I should, as part of the early adopters of this, being airdropped a certain amount of tokens is fine. But for any further airdrops, I mean, those are kind of like the criteria to figure out and understand what type of contributions you want from your community. And game theory and designing that aspect, I think, is way more important as opposed to just slapping a full on restriction. I mean, because technically, what's the difference between this and traditional finance, right? I mean, by excluding a number of people just because they have not done or completed a certain action. So yeah, definitely, my opinion is instead of restricting, figure out how to better incentivize. What do you think, Hanson, about this situation?
So I'm curious, like how much did like what was the price action of the OP token? Like what price was the first day and like how much did it dump?
Yeah, I mean, I think okay, so it was pretty hectic, right? So I was up, I would say probably like in the wee hours of the morning, trying to figure out how to claim my tokens. And initially, when the web page was not allowing you to claim, and people were interacting directly with the smart contract, I think the token was trading around $3 at that time, at a high of three. By the time I was able to get my hands on my tokens and sell it, it was around 180. And I think right now it's probably like 120. But this most recent decline has mainly been a result of the broader crypto and macro market. So I would say like right now, for anyone interested in OP as a project and OP, use case and potential, I would try to understand how much of the people have actually sold their airdrop that they received, understanding the token supply and the token unlock schedule, and figuring out and from there figuring out okay if a number of the people that wanted to dump has dumped already, and anyone else that didn't dump probably wants to huddle. Then if the price action and the broader market is pretty healthy, then potentially it might be a good time to buy. But I mean, definitely not financial advice, and definitely do your own research.
Yeah. I think like people shouldn't be blaming the community to claim the airdrops and dumping them up immediately because I think this is more like um expected thing to happen. Like the project team should have like implemented more incentives or like staking mechanisms to convince people to that holding the tokens will give them long-term value.
Yeah, I mean, right now, I mean, everyone's well aware that we're in a bear market, right? So, I mean, any type of free money, and in this market, I would say it's very hard pressed for you to expect a lot of people to hold your token right now. A lot of people are hurting, and even though it's like, I think the lowest amount that you could have gotten was like 100 or so tokens. That's $100 US, right? And for the average person, that might be very helpful. So I mean, I would never judge anyone dumping for any reason, and instead just figure out, understand who are the potential people that might dump, who are the potential people that might be selling at what certain price point, and from there make your own informed decisions on whether or not to buy. So
Yeah. And
okay,
yeah.
yep. So yeah, let's move on, right? I mean, so the final, I guess, headline of this last week was the OpenSea arrest, right? So what had happened, just to give a quick recap on the situation, I think it was sometime, mid late last year where the I think it was head of product, if I recall correctly, basically was conducting insider trading. So what he had done was the fact that OpenSea, I'm sure a lot of you guys have used OpenSea. So what had happened on OpenSea is usually when you first land onto OpenSea, the website, on the landing page, you see a few projects being shown and marketed right away, right? And those projects usually once when they're first put on display, pumps. Okay, I mean I think this is just crypto retail ape behavior as usual, where the first things that you see you want to buy. And what had happened was the head of product for the ex head of product for OpenSea, what he had done was because he had insider knowledge on understanding which projects will be put on the landing page, he of course, doing something sketchy. What he did was basically he bought a number of these NFTs first, and then when OpenSea would rotate its NFTs that it's posting on the landing page, they would pump, right? And then he would immediately sell them and profit and make a difference. I mean, you know, even though crypto is still very unregulated, it was a pretty no-brainer, I would say, for this type of behavior to kind of be illegal, right? So as a result, over the last week, it was announced that he's arrested, and I don't know if he's charged yet, but basically, this has become the first ever insider trading scheme in crypto that has been publicly or publicized, so to speak, right? So I mean, it's a pretty monumental thing because I think it's going to show that we're kind of converging with a lot of the regulatory framework that's already embedded in the traditional finance markets. And if a lot of these scammers think they can get away with a lot of these things, I would reconsider because these next few years, there's going to be a significant amount of regulatory crackdown, in my opinion. So, what do you think, Henson?
So like NFTs are not securities. So I'm quite curious like what kind of charges can they charge this person. And yeah, so yeah, I also expected like there will be more regulatories and regulations and laws regarding NFT trading.
Yeah, I mean, so I would actually disagree with you. I think, to be honest, I think NFTs, crypto tokens, whatever, eventually in the eye of the law will be some sort of security. This is just, I guess, inevitable in my opinion, because of the fact that at the end of the day, when you're trading, you're buying and selling something, and it accrues value, and it gains up in price. That's pretty much, I would say the informal definition of a security. Basically you're speculating, right? So as a result, I would definitely see, with more regulatory framework coming out, we're going to be seeing, this probably be more defined and, having it more clear for everyone to understand. So definitely for everyone trading NFTs, be on the lookout for that. And be careful. So
Okay. So as usual, we'll remind you guys about our candy drop event again. So Huobi users with an average spot trading volume about 100 USDT of any digital assets for the last 3 days can register for the candy drop event. And participants can win up to 100 USDT per entry and up to 1,500 USDT per week. The more volume you've traded, the more entries you can register for, and you will have a higher chance of winning. We will also airdrop a candy drop double up coupon to whoever did not win anything in the candy drop event. So using the coupon will double up your chances to win, and you can stack up to a winning chance of 100%. And moreover, for each candy drop event, one lucky star winner will get a grand prize of 1,000 USDT. So for more information, you can go on the Huobi app and click on the new listing event page.
Yep. So Henson, right now I'm trying to access the Huobi app. So just to remind everyone, be sure to leave your questions in the Huobi live chat on the official app. And just give us a quick sec for us to go through some technical difficulties. I mean, so Henson, I mean, in the meantime, I mean, is there anything that people should be aware of for the Candy Drop event? Outside of what you just mentioned?
Um, Not really. So this week we won't have Q&A section, and there won't be an airdrop password for our live stream raffle. And yeah, and um, if you are interested in this Candy Drop event, um, make sure to go on to our official Huobi app, since this is the place, this is the only place you can register for the event. Yeah.
Yeah, I mean, yeah. So I guess while it's still loading, do you want to tell us about like your experience? I guess because I guess some of us want to know. I mean, because you purchased the Goblin, so I mean, what's your experience so far with the community?
It's definitely weird, because since there's no Discord, it's hard to know like what is the community chatting about, and what is other people thinking regarding the new burger airdrop, or what's going to be next for Goblintown. So the only source of information you can get is from Twitter. And I don't think people on Twitter is as active as people on Discord, since it's difficult to start conversations where basically if you want to start a topic, you have to tweet, and then not everyone can see, and only your followers can see your tweets, so not everyone can participate in your discussion. So definitely a new experience, I think.
Okay, so I've had the chance to go through the questions. So one question is about goblins. And basically they're asking, is there a goblin coin and will there be a potential Goblin Town coin?
No, I'm not sure if there will be a potential for a Goblin coin, but at the moment there's no such news, and there's no rumors about a Goblin coin.
Okay. Yeah, I mean, so I guess if there are no more questions, thank you for taking the time as usual, everyone. And be sure to, again, just to repeat, be sure to follow us at Huobi_research on Twitter or huobiresearch.medium.com, right? Where we have a number of different latest articles talking about the latest crypto trends as usual. Heza, what was the latest report that you published recently?
Oh, it's about the NFT trends for between January and May.
Yeah, so I mean, definitely for the people that are interested in NFTs in general, be sure and to have a read and take a look and let us know and give us any feedback for sure. We'll definitely get to it as usual on a weekly basis. And again, just to repeat, this time there's no candy drop event winner that we've announced on this crypto chat, but as usual, definitely participate and be on the lookout because you can be a winner as well, right?
Yeah, thank you.
So thank you, everyone. Have a good day.